Welcome to this week's episode of 0 to a Million, brought to you by Unstack. I'm your host, Zach Rego. Today, I'm joined by Stu Bradley, former NFL linebacker, second professional athlete actually on the podcast, which is awesome. Current co-founder and general partner at LCAP Holdings, one of the lead investors actually in Unstack's most recent round. Stu, thank you for joining me today. Really excited to have you on.
Thanks for having me on, Zach. Excited to be here.
I forgot we had another professional athlete on. I thought you were the first. Luke Bonner was on an episode earlier, which was a great one. Founder of Power Forward now.
Oh yeah, that's great. I know.
Yeah, awesome. That's great. That's our worlds colliding. So, thanks so much for joining me. I obviously want to dig in a little bit into your background. I think your interesting career. Obviously, former NFL linebacker. I think close to a 6-year career. 7-year career.
All the same.
All pro in 08. I looked up the stats at the combine, some pretty impressive numbers. So let's dig in a little bit there, and then how you got your interest into venture capital and building businesses.
Yeah. So football is kind of a unique sport in that this is not to knock football players, but I feel like on the spectrum of like how tall and fast can you run as a pathway to get into a professional sport, like football's kind of, it can facilitate that, where basketball or baseball, like there's a lot of kind of skill dependency that you need to build up. Quarterbacks have that, but maybe case in point here is I was a quarterback in high school, and I don't think a single university spent an iota of time considering me as a quarterback. They're like, yep, you're going to be a linebacker. So played college ball at Nebraska, was an accounting finance major there, and was fortunate to get drafted. Played 7 years in the league, and I say that the first part more to highlight that I don't think football was ever really a pure passion of mine. It was just it checked a lot of the competitive kind of aspects of my personality, but I was always interested in other things. And when I retired in 2014, I was kind of mulling over options and was really intrigued in investing. Had kind of always been interested in it since before when I was in college. And the path to almost rebranding yourself as a professional athlete, I think is a really important thing if you want to have a second career that doesn't just leverage, I have a cool origin story. Like, how do you like build some tangible skills? For me, that was like, let's get to a bank, start at the bottom rung, and just really build like a hard skill set. So like, how do you build a financial model? Like, do you understand kind of inner workings of how the capital system works? And once you've like kind of had developed that skill set, are you able to leverage it successfully in some sort of investment role? And so my path was retired in 2014 after we got our asses kicked in the Super Bowl at Denver. Joined Goldman, was there for just under a year in the TMT group in New York, doing investment banking, which is, brutal, but a great teacher. Like, I don't think you can fabricate the 110-hour work weeks by yourself. So like, it's a good forcing function to learn just because you kind of have to. After a year there, I left and joined a hedge fund in New York called Steadfast. Was there, 4.5 years investing in tech. And my internal kind of benchmark when I left was like, all right, I'm going to pay my dues for 5 years working for other people just to totally rebrand and credentialize, and then I can launch my own thing. So passing that milestone at the end of 2018 was kind of ideating what form my own thing would take, and met my now partner Kunal, and we spent 6 or 7 months kind of ideating on what we wanted to build, and we launched our fund LCAP in early 2019.
That's great. So Steadfast, you kind of get your start in investing in technology companies. Where were you focused, and what was your involvement? Were you kind of an analyst in identifying opportunities? Were you actually leading the investments? I'd love to learn a little bit about how you started to get exposure to where you are today.
So Steadfast is a typical long short equity shop. So it wasn't like I don't want to get too in the weeds on hedge fund structure, but it was, you're picking shorts, you're picking longs. My coverage area was telco media and kind of the tech businesses adjacent to that. So everything from data center REITs to telecommunication providers to networking businesses to Netflix, kind of spanned the gamut. You touch some software stuff. So it was an interesting seat, I think, from a coverage perspective, because not only do you look at businesses that are hyperscaling like a Netflix or a Spotify, you're also looking at traditional, more kind of infrastructure-centric plays with lots of debt and complicated cap structures. And some of that is just a function of in the New York TMT office for Goldman, it's just highly telco media centric because a lot of the tech business kind of centers out of SF. And the more time I spent, kind of cutting my teeth, the more I was drawn to, technology and software. And when I was finally able to launch my own thing, it was definitely where I wanted to play. And a lot of that was, I think, informed because we by the venture arm that we had at Steadfast that was kind of also under the TMT umbrella. So there was just a lot of back and forth around things we were seeing in the public markets and at scale, challenges, M&A best practices, things that work and didn't work, transitions, and then applying those, at least in conversation, to the private book to kind of just build more of a way to kind of diligence investments that would be consistent across different sectors, which has been super helpful as we've kind of moved, as I began investing in venture, just because a lot of the core kind of elements to successful company building is consistent, right? I mean, there's things that public companies at scale have to do that startups shouldn't do, but there are a lot of best practices that, when the time is right, you should be implementing those things. So I think seeing companies at a really wide range of size across a myriad of different kind of growth trajectories, some declining, some hyperscaling, some kind of going through, ups and downs. It was a great kind of training ground. But having done that and looked at people in BK selling, businesses in a fire sale and looking at hyperscaled growth, I definitely love the early stage aspect of investing and wouldn't change it for the world now.
Yeah, no, that's interesting. I mean, that's such a great hands-on, getting paid to learn, which I think is unique about your story. Like you probably could have found a way to just start investing in early stage companies right when you left the NFL, but you're getting paid to learn about how, what to look for, how to analyze a company. And that's a really unique experience. I love that you were shorting and longing, some of the biggest companies in the world. And auditing them is probably useful. And now you found El Cap. What stage companies are you investing? Obviously, we talked a little bit about your investment in Unstack, and we're pretty early. Is that par for the course for you guys, or have you gone a little bit farther?
Our bread and butter would be a seed shop. We'll look at pre-seed stuff, and we'll definitely participate in A's. Later stage stuff is less a function of are we interested and would we like to participate, and it's more just as an emerging manager, how do you stay efficient with your capital? Yep. You do have to have some kind of portfolio construction elements to how you deploy capital in different sectors, but I think seed is a great qualification for our shop now.
And when you're you got a lot of background now in analyzing investments, right? So when you're analyzing an investment, what are you particularly looking for in a company? And obviously, if they have revenue, certain things that you're analyzing there. And I think from a partnership perspective, you partner with Kunal, does his skill set mirror yours, or are you guys really complementary to each other when you're analyzing a business?
I'll take the latter part of that question first. I think Kunal and mine's skill set definitely were divergent when we started, right? He has operational experience. He, built and worked in and sold a private business and had worked in venture, a collaborative fund. So we thought about it as like, let's take the Venn diagram of what we can do well. And we want to have as little overlap as possible, both, from a network and, just innate skills and experiences, but also, with work experience. So I think that's been a real kind of strength of our partnership, is just having such different initial professional paths. As far as what we look for in investments, maybe a caveat is like public market investing, a lot of the elements that we focus on now around product and distribution and like, how do you, actually find product market fit? How do you properly sequence supporting, your growth strategy when you get there? Like, those are things that you don't really worry about as a public market investor. It's much more of like, what do I think the magnitude of X metrics going to be versus expectations? So I think that maybe the reason I've gravitated towards earlier stage investing is because I was always drawn towards those product challenges, right? Like when there would be a new, like ramping up on a new business and learning a new industry and understanding, like going to the first principles of like, what's the let's map the cash flows, who's paying who for what, how sticky are each of these elements? Like, just like, let's build the economic model and the financial model and just see where, what are the current workings of the industry? Like, what is a new product going to do that's going to change that? Like, those elements, I think, are still really valuable as we kind of do broader marketing work, like work around the market. Like, is this a big enough market? Who's paying who for what? What are the competitive elements? Like, the traditional kind of corporate strategy stuff is super, super valuable. Or the public market experience was super valuable in developing that skill set. The product distribution stuff, which I think is probably the thing that I'm most drawn to now, is, that's definitely been a ramp, because those are issues that you're so beyond that when you're a public company. Like, it's not, will people pay for your product? It's like, how many more people are going to pay at what price, and
right,
how efficiently can you attract new customers? It's much more scaling issues. And I think there's for sure carryovers, but the more I'm in the seat, the more they feel like they're different. That makes sense?
Yeah. No, that does make sense. I think when you're reviewing an investment, then, right, there's historically you've had probably spreadsheets and a lot of historical data, right? Quarter over quarter, profit, everything. When you're looking at public companies, when you're looking at private companies that are very early, 12 months, a year, 2 years into building this, or what are the things you're really looking for? Is it exec team, so on and so forth? I'd love to understand, like, when you guys are checking the boxes, what boxes are you trying to check?
The way we think about founder problem fit is like, how much can the team actually get done without external resources, right? Ability to raise money is also a skill that's important for early stage founders, but do they have the technical know-how and a deep understanding of the problem they're solving, and where the skeletons are buried in the industry, and like the unknown unknowns? Do they have more insight into those problems than the uninitiated, right? It's like, it's almost, is there a moat around why this team, with the current resources they have, like actually have a feasible path to solving the problem? Like, right. Unstack's a good example here, right? The team has a deep understanding of the challenges that are in, MarTech, and as the industry's evolved, how the kind of silos of different businesses of, my marketing and my CMS and, managing those at scale, at different scales, is just a cumbersome problem. And the deep understanding the team has and the ability to stand up a product with relatively little financing, like, it all kind of comes together to form a foundation that you think they can scale off of. So it's hard to be too prescriptive around that, because I think you could find founder problem fit or founder market fit a myriad of ways. It's not like you don't need to have an entirely technical team. You don't need to have a team that's excellent at marketing, but think about it like a creative player on Madden or NBA 2K. Like, you only have X amount of points. Like, if you have deficiencies in one area, like, you hope that there's strengths in other areas to make up for those, and dimensionalizing kind of what teams are good and not good at is kind of part of our job, right? And hopefully the investments we make, we see a way that we are uniquely positioned to help improve the areas that aren't strengths. So that's a long-winded answer, but
no, that's helpful. I mean, I think it's funny. I interviewed Nathan Laka, and you kind of mentioned like the founder market fit, and he's a really good example of that with his recent business called Founder Path. Like, he was a founder, he built a business, he took funding. It was not a disaster, but it was a struggle for him, young kid building a business at the time. I think he was just graduated college. And, now he wants to fund businesses, but he has already built an army of founders that follow him in his podcast. So like, he can build a business selling to that audience pretty quickly just by telling his story to an audience he's already created. Like, and I think that's what you're trying. And
that's a great example, right? Like, if you have baked in distribution because you have a massive following of other operators or people that you're just a thought leader in the space. And I know that's a buzzwordy term, but yeah, that can be a real differentiator in trying to scale and helping you attract the technical parts of, the technical talent to help you, execute on the vision. Like, it's a good example of being able to leverage one of like the non-traditional or special skills you have to scale in an efficient way.
Yeah, and I think Grant, to his credit, I don't give him a lot of credit on this podcast, but I'll give him some here. It's amazing how many of our customers, especially from that first like few months of, around this time last year, I would say, or the first few months of last year, are just from his network. One way or another, just kind of the Boston startup community rallying around someone that was, him and Steve building something. Like, and I think that's interesting you say that. I've never really thought about it, but the Laka example is that at scale. And, Grant was able to get really far just by tapping his network in the Boston startup community, which is awesome to see.
I think it's more about, is there awareness of what they do well and what they need to have augmented, right? Like, that alone is a huge like check mark for us. Like, do they get kind of what they innately do well and what they don't do well, and are they willing to take help on the things that they maybe don't do well but would like to do better? And that's maybe, I think, a rub for a lot of people is like, oh, I'm a product guy. It's like, well, maybe you don't have product experience, or maybe you don't have the design experience, whatever it may be, you can insert anything. But is there a willingness to take help there? Because this is, for the founders, this is, their baby, right? And so they, like, willingness to let go, especially in areas that they know enough to be dangerous, but they're not experts. Like, let's, as you bring the team on, are they going to, take their hands off of some aspect of the business? Like, you can all, like, Jack Dorsey is a good example of a founder who's did it a different way. But I think as we look to write early stage checks, where that feels more the exception than the rule.
So, question on the founding team, because I interviewed Ralph recently, and he was adamant that, like, a non-technical founder, if that person is bringing him an idea or an investment, regardless of kind of phase in the business, he wants to make sure that there is a technical resource that's full-time. He doesn't invest in companies that have outsourced development of the product in the early stages even. What's your thoughts on that as an investor that's a little bit later stage? I assume most folks have a tech team, but I imagine there's some semblance of an outsourced team involved at a lot of the companies you look at.
Yeah, I think if for instance, we'll do some pre-seed stuff, and in those cases, it's back to, like, how much can the founding team actually get done without external resources, and not having any technical chops and building a software product that's just a harder hill to climb. So maybe back to your Laka example, like, if they have exceptional advantages in other areas to make up for the lack of technical skills, then it can still work. But I think there's fewer of those people, right? There's fewer people with a massive audience they can leverage to sell products to. And so you end up being that most of the things we're get excited about, there is kind of innate technical skills in the team.
Okay. And then particular industries or verticals that you guys have found. Obviously, we're MarTech. You have another investment that's kind of a distributed teams tool in Friday that we've actually interviewed Luke, the founder of Friday, who's our first interview, which was an awesome one. Any particular spaces that you all are really focused on investing in?
So our thesis is investing at the collision of cloud data and connectivity. So we're looking for business opportunities that are just really enabled by, the ubiquitous connection between consumers and businesses. Cloud computing obviously has been a massive unlock, and then just people who can leverage the increasing amounts of data that are just being captured around users. I think building or trying to build product in a vacuum makes me really nervous as an investor, just because there's so much innate bias that we all carry, and product development should be an iterative thing. And if you have users, like that is, that's rocket fuel if you can leverage it correctly. The information that you can garner from your users to make smarter product decisions, and really connecting the flywheel. I think iteration and rapid learning, especially for the businesses we're looking at, that because we're looking at opportunities that are unlocked by the kind of culmination of those three things, is super important. So I would rather back a founding team that understands the kind of flywheel that user insights can give them, even if there's product holes, versus someone who maybe is more stringent about the vision of the product they want to build and is less cued in to user feedback and letting the market dynamics kind of ultimately drive the product. And that's a tricky balance, right? Because you do want to have a vision of the problem you're solving, but this is, I think Elon Musk is a great example here, right? Like, he has a lot of advantages, but one of the things he does really well is he maps commercial opportunities to fuel the end goal, right? Like, I'm going to sell a battery to help me sell a car. I'm going to, sell a car to help me sell software. Like being able to map actual things people will pay for to build what you're trying to build is great. Like, I like to call it the Shangri-La problem. Like, you don't want a Shangri-La business, meaning you have to climb through the Himalayas, across rocks and snow, and it's treacherous. And when you get there, it's going to be great. It's like, because it's just not realistic. Like, you have to provide value earlier. And the long-winded way of saying user feedback and understanding the flywheel and the dynamics that are unlocked by data that you can capture is super important, I think, to building successful software.
So you do obviously customer interviews as you're kind of auditing a company or a potential investment. Do you ask the users, like, hey, how receptive are XYZ founding team to your ideas, or how have you communicated with the founders? Do you try to get any of that insight from the customer themselves? Yeah,
I think it's maybe we wouldn't frame it in those words. It would be how responsive has the team been to feedback? How quickly are new things shipped when there's a problem? Like, I think QA and just customer service and customer success is actually a pretty good indicator of how important the founding team thinks that data is. But a lot of the customer interviews are like, is why do you use the product? What else do you consider? I mean, I would say from our perspective, it's more competitive framing and just willing to pay. I mean, it would be great if most of the customer interviews we did for seed stage investments were like, I love the product and I would pay 10x for it, but like, that's just rarely the case, right? It's more dimensionalizing, how do they actually land on the product? Do they like it? Are they going to outgrow it? Is the pain point that it's solving super idiosyncratic and less pertinent to a broad base of users? I think the understanding how the team uses data or is clued into their customer data to drive product is really more asking about their product roadmap. Like, how are you deciding what features are important? How fluid is your roadmap? How are you supporting changes to your roadmap? How do you think about timing between supporting marketing efforts on a new feature versus engineering resources to get it to a perfect state? Like, we'd much rather have listen to user feedback, ship quickly, iterate quickly, start the connect all the data pipes, right? Like, how efficiently is the product marketer mapping sales efforts to engineering efforts and pushing things through the queue. Like, it's less about the outputs, I think, when we're investing, and more about, are they trying to connect the things together? It's really a systems problem. Like, if they've properly connected the pipes and we think the problem they're solving is big and we think that there's an aptitude to ship product, like, if you can just, as an investor at this stage, focus on making sure that those are all efficient and properly connected, and you're playing in the right market, like, yeah, there's other risks that are gonna pop up and other things they need to toggle as businesses scale, like pricing. But that's a really good indicator of, like, they're going to continue to scale and they're going to have something, like, versus we're going to just put our heads down and build and hope that the market likes this. I just think that's less and less of the path forward. Like, maybe that was the way you did it in 2007, but that doesn't feel like a prudent way to build product anymore.
Yeah, I totally agree. And I think at the stage here, and something I've learned, over the last 6 or 7 months at Unstack is early adopters provide a lot of feedback, and you should take that. Like, I think when I was at WordStream and we, as we grew, it was easy to get feedback, but there was a lot of it and there was a lot of noise. But I think when you have early adopters that are using a product at a very early stage company, like, they know there's going to be bumps, but they're willing to work through those with you if they feel like they're invested in helping you deliver great value over time. And we see it a lot in our Slack channel. We see a lot of feature requests, which are awesome. And then when we ship them, we see a lot of, like, oh, that's amazing to see this live. Like, thank you guys. And I think that is, like, it's challenging and it's sometimes a little bit noisy, but it's really powerful to see it come to completion and the actual, customers be like, wow, it's here. Like, we're really excited to use it. So it's a great way of looking at things. I think it's an interesting way for investors to be looking at it, as if the company has that system built.
Maybe the North Star shouldn't change, right? Like, the annual plan or the 3-year plan should, like, that. I think that having vision is important. It's more about how do we efficiently get there? And that's where I think the feedback's super important on, like, the twists and turns. It's like, I know that my destination I'm putting in my GPS is consistent, but whether I'm taking a right or left here or, going to sit in traffic, like, that's dynamic. And that,
yeah,
as long as they're all on the roadmap and it's so nuanced that it's hard to I always am hesitant to simplify it, but I think finding the balance is challenging, right?
Yeah, definitely. Especially when it's easy to get sidetracked by a check, in the short term.
Yeah.
Be it a big deal or some service or something. It's easy to get sidetracked by that, and that's, sometimes you have to put on the blinders. And I think you bring up a great point. Like, if it's on the roadmap to the end result, then feel free to take a couple different turns. If it's not, then be wary. And it's something we have a lot of discussions about, and I'm sure, you and Grant and Steve have them as well. Stu, thanks so much. Where can everyone find you or connect with you if you're open to providing opportunities to connect with folks that are interested in chatting with you?
Yeah, I mean, I'm on Twitter at Stu Bradley, or they can shoot an email at stu@lcapholdings.com.
Awesome.
Or you ping Grant at Unstack and he'll forward the message.
There you go. Yeah. Or me. We can chat about Unstack, and then I'll pass you along to Stu.
Excellent.
Awesome, Stu. Thanks so much for joining me. It's great to catch up.
Awesome. Thanks.